So, are you ready to dive into the world of real estate? Owning rental properties can seem really appealing. Like, who wouldn't want a property that brings in extra cash?
It's like having your money work for you. Right.
Exactly.
Yeah.
And to guide us through this exciting world, we're diving into Real Estate 101, how to buy your first rental property. Think of it as our roadmap for today.
This source is great because it doesn't just throw you into the deep end. It starts with something really fundamental, shifting from a homeowner mindset to an investor mindset.
That's interesting. It seems like a subtle difference, but I bet it's crucial.
It is, because we're not talking about finding your dream home here. We're talking about looking at property as a business opportunity, as a way to build wealth.
It's like wearing a different hat, right?
Oh.
You're not just buying a place to live, you're making a calculated investment.
Exactly. And speaking of calculations, this source doesn't sugarcoat the financial realities.
No, it definitely doesn't. It mentions a 20% down payment, which is a lot more than you put down for a primary residence. Why is that?
Well, lenders see investment properties as inherently riskier than primary homes.
Riskier. How so?
Think about it. With a primary residence, you're less likely to default on a loan because, well, you need a roof over your head.
True, you can't exactly walk away from your home as easily.
Exactly. With investment properties, there's a higher chance of things going sideways, tenants not paying, unexpected costs popping up. That 20% down payment helps offset that risk from the lender's perspective.
That makes sense. So it's not just about having that down payment, though, right?
No, this source emphasizes being financially prepared in general, and a big part of that is your credit score.
Oh, right. Credit scores are always a big deal when you're talking loans.
They are. Lenders use your credit score to assess how responsible you are with money. A higher credit score makes you a more attractive borrower.
Makes sense. So what kind of credit score are we talking about to be considered a good candidate for an investment property loan?
The source recommends aiming for at least 680, ideally higher.
So it's definitely worth investing some time to build up your credit. Now, the source also touched on emergency savings, and I thought that was really interesting. Why are emergency savings even more important with a rental property?
Well, with your own home, if the washing machine breaks, you fix it, right?
Right, because who wants to live without a washing machine?
Exactly. But with a rental property, a broken washing machine could mean lost income if the tenant decides to leave.
Oh, I see. It disrupts the flow of rent.
Precisely. Plus, repairs on a rental property can sometimes be more extensive and costly than what you typically face in your own home. So having that financial cushion of emergency savings is crucial.
It's all about being prepared for those unexpected bumps in the road.
Exactly. This source actually uses a phrase that really stuck with me. House rich, but cash poor.
Oof, that doesn't sound good. What does that mean exactly?
It means pouring all your money into a property and not having enough liquid cash to handle unexpected expenses or vacancies.
So it's like a balancing act. You need to invest in the property, but also have enough cash flow to keep things running smoothly.
Exactly. And that brings us to the next stage, finding the right property. And let me tell you, this is where things get really exciting.
Okay, now we're talking. Time to browse listings, right?
Hold on a second. Remember that investor mindset we talked about?
Right. We can't get swept up in the excitement just yet.
Exactly. This isn't about finding a place you'd love to live. It's about finding a property that makes financial sense, a property that aligns with your investment goals.
So how do we go about that? Where do we even begin?
The source stresses the importance of thorough market analysis before you even start looking at individual listings.
So it's not as simple as finding a charming house in a nice neighborhood. There's more to it than that.
Much more. It's about digging into the numbers, understanding the forces that drive profitability in a particular market.
Okay, I'm intrigued. Break it down for me. What are the key things to look for when analyzing a potential rental market?
Well, start with the local economy. Is the area experiencing job growth? Are there major companies moving in, bringing new residents with them?
Because more jobs mean more potential renters, right?
Exactly. A strong job market usually translates into a healthy rental market.
Makes sense. What else? What other factors should we be considering?
Population trends are huge. Is the area attracting new residents, or are people moving out?
So we want to see that upward tick in population growth.
Exactly. A growing population generally indicates a higher demand for housing, including rental properties.
Makes sense. Now, I have to ask, what about those up-and-coming neighborhoods that everyone seems to be talking about, are those worth considering?
They can be tempting, right? The allure of getting in early on the next big thing.
It's like trying to time the stock market, but with real estate.
In a way, it is, but the source cautions against banking on speculation alone. While those up-and-coming areas can offer potential for high returns, they also come with higher risk.
So it's a gamble, basically.
It can be. There's no guarantee that those predictions will pan out. The area might not develop as quickly as anticipated, or the market could take a downturn.
So it's about finding that balance between potential reward and acceptable risk.
Exactly. And that's where thorough research and due diligence come into play. Don't just rely on hype. Dig into the numbers, look at historical trends, and consult with local experts.
Solid advice. It's like anything else. Informed decisions are usually the best decisions.
Absolutely. Now, another critical factor to consider is vacancy rates.
Vacancy rates. So how many properties are sitting empty?
Right. A low vacancy rate suggests a high demand for rentals, which generally means you'll have an easier time finding tenants.
And probably more flexibility with setting rental rates.
Exactly. On the flip side, a high vacancy rate could signal an oversupply of rental units, making it more challenging to attract tenants and potentially driving down rental income.
So it's all about finding that sweet spot, enough demand to keep your property occupied, but not so much competition that you're constantly lowering rent.
Precisely. Now, here's a curveball that often catches first-time investors off guard: rent control laws.
Ah, yes, rent control. That's something most people associate with big cities, right?
It is more common in larger metropolitan areas, but it can exist in smaller cities too. And it's something to be aware of because it can significantly impact your potential return on investment.
How so? What do rent control laws actually do?
Essentially, they limit how much a landlord can increase rent each year, even if market rates are soaring.
So even if demand is high and you could potentially charge more, you might be capped at a lower rate.
Exactly. The intention behind rent control is often to protect tenants from drastic rent hikes, but it can impact a landlord's bottom line.
I see. So it's another layer to consider when evaluating a potential market.
Absolutely. The source encourages doing your homework, researching the specific rent control laws in any area you're considering.
Knowledge is power, as they say. It's better to be aware of these regulations up front than to encounter surprises down the line.
Exactly. It's like trying to predict the future, right?
Yeah.
But hey, that's part of what makes real estate so interesting.
It definitely keeps things exciting. Now, speaking of exciting, this is where I usually get a little ahead of myself. I start picturing myself browsing listings, maybe putting in offers.
Ah, yes, the thrill of the hunt.
Exactly. But I have a feeling you're going to tell me to pump the brakes a bit.
Oh, you're not wrong. Remember, we're still in that market analysis phase.
Oh, right. We're not quite ready to jump into the deep end of property listings just yet.
Exactly. We need to lay a solid foundation first. And part of that is understanding the different types of properties that might align with your investment goals.
Makes sense. So we're talking about more than just the classic single-family home.
Exactly. The source talks about branching out, exploring options like multifamily properties, vacation rentals, even commercial real estate.
Whoa. That opens up a lot of possibilities.
Yeah.
So walk me through this. Let's start with multifamily properties. What are the key things to consider there?
Well, imagine owning a duplex or a small apartment building.
More units, more potential rental income, right?
Exactly. But it's not as simple as just multiplying the costs of a single-family home.
Oh, right. There are different dynamics at play with multifamily properties.
Precisely. For example, you'll have shared expenses like landscaping, snow removal, maybe even some utility costs.
Things you wouldn't necessarily have to deal with in a single-family rental.
Exactly. And managing multiple tenants can be more demanding than managing a single family, so those are factors to weigh.
Makes sense. So it's about crunching the numbers carefully, factoring in those additional expenses.
Exactly. Now, shifting gears to vacation rentals, those offer a whole different ballgame.
Vacation rentals. Okay, now those sound fun.
They can be, both for the owner and the renters. Imagine owning a beach house or a cabin in the woods.
Who wouldn't want that, right?
But managing a vacation rental is a different beast than managing a long-term rental property.
How so?
Well, with vacation rentals, you're dealing with a constant churn of guests.
Oh, right. People coming and going all the time.
Exactly. So there's a lot more cleaning, maintenance, and guest communication involved.
It's almost like running a mini hotel.
In a way, it is. And you also need to factor in seasonality.
Oh, right. Some seasons might be busier than others, affecting your income flow.
Exactly. So vacation rentals can be lucrative, but they definitely require more hands-on management.
It's not as passive an investment as a long-term rental.
Precisely. Now, the last category the source touches upon is commercial real estate.
Commercial real estate. That feels like a whole other world.
It is, and it's generally not for the faint of heart or those just dipping their toes into real estate investing.
So we're talking bigger investments, higher stakes.
Exactly. We're talking office buildings, retail spaces, industrial properties, things of that nature.
And I imagine those types of properties come with a whole other set of regulations and legal considerations.
You bet. Commercial leases are different from residential leases. Often, they're much longer, more complex.
I can only imagine. So with commercial real estate, it's probably even more crucial to have a team of experts in your corner.
Absolutely. We're talking experienced commercial real estate agents, lawyers specializing in commercial real estate transactions, the whole 9 yards.
It sounds like you need to bring your A game to the world of commercial real estate.
Absolutely. Now, regardless of the type of property that catches your eye, the source stresses one thing above all else: due diligence.
Ah, yes, due diligence, the cornerstone of any smart investment.
Exactly. And when it comes to real estate, due diligence involves several key components.
Okay, walk me through this. What are the essential elements of due diligence when evaluating a potential property?
First and foremost, a thorough property inspection is non-negotiable.
So don't skip that home inspection, even if the property looks pristine.
Exactly. You need to know what you're getting into, identify any potential issues that might require costly repairs down the line.
It's like getting a checkup at the doctor, but for the property.
Precisely. And just like you wouldn't rely solely on your own diagnosis for a medical issue, don't rely solely on your own assessment for a property inspection.
So hire a professional inspector, someone with a trained eye who knows what to look for.
Exactly. It's worth the investment. Now, beyond the physical inspection, due diligence also involves digging into the financials.
Ah, yes, the numbers. Those pesky numbers that can make or break an investment.
Precisely. This source encourages us to analyze the property's income and expenses.
So how much rental income is it generating, or it could potentially generate?
Exactly.
Oh.
And then you factor in all the expenses, things like property taxes, insurance, maintenance costs, any HOA fees.
And don't forget those unexpected costs that always seem to pop up.
Absolutely. It's crucial to have a realistic picture of the property's cash flow, how much money it's actually putting in your pocket each month after all the expenses are paid.
Makes sense. Because a property might look good on paper, but if it's a money pit, that's not a good investment.
Exactly. You want to make sure the numbers work in your favor.
So, thorough property inspection, detailed financial analysis. What else falls under the umbrella of due diligence?
Researching the neighborhood.
Oh, right. The neighborhood matters too. It's not just about the property itself.
Exactly. The source encourages us to look beyond the property line and consider the surrounding area.
So what are we looking for in a neighborhood?
Well, consider things like proximity to amenities, schools, parks, public transportation.
Things that would appeal to potential renters.
Exactly. You also want to look at crime rates, the overall feel of the neighborhood.
Safety and desirability. Because a great property in a not-so-great neighborhood might not attract the best tenants.
Precisely. And speaking of tenants, that brings us to another crucial aspect of real estate investing: tenant management.
Tenant management. That's something I'm a bit nervous about, to be honest.
It's understandable. Dealing with tenants can be one of the most rewarding and challenging aspects of being a landlord.
I can imagine. It's all about finding that balance between being firm but fair.
Exactly. And the source offers some excellent tips for navigating those tenant relationships successfully.
I'm all ears. What are some of the key takeaways when it comes to managing tenants effectively?
Well, it starts with finding the right tenants in the first place, which brings us back to the importance of thorough screening.
So background checks, credit checks, income verification, the usual suspects.
Absolutely. But the source encourages us to go beyond those basic checks and trust our gut instincts as well.
So like having a conversation with potential tenants, getting a feel for them.
Precisely. Ask open-ended questions, pay attention to their demeanor, their communication style.
It's almost like you're interviewing them for a job, in a way.
You could say that. You want to make sure they'll be responsible tenants, that they'll respect your property.
Makes sense. So we found great tenants, we've signed the lease. What's next on the tenant management checklist?
Communication is key. Be responsive to their requests. Address any maintenance issues promptly.
Because A happy tenant is more likely to be a long-term tenant.
Right. Precisely. And when it comes time to handle those inevitable, difficult conversations, be direct, but respectful.
So, like, if rent is late, don't beat around the bush, address it head on.
Exactly. And always document everything.
Ah, yes. Documentation, the landlord's best friend. Why is documentation so important?
It protects both you and the tenant. It provides a clear record of communication, agreements, any issues that arise.
So if a dispute ever arises, you have that paper trail to back you up.
Exactly.
It's like having a written record of the entire landlord-tenant relationship.
Precisely. And speaking of relationships, let's talk a bit more about those alternative property types we touched upon earlier.
Well, right. We kind of veered off into the world of tenant management there.
We did get a little sidetracked, didn't we? But that's the thing with real estate. There are so many different facets to consider.
It's like a puzzle with a million pieces, but I'm ready to put more pieces together. So let's revisit those alternative property investments. We started with multifamily properties. What were some of the key takeaways there?
Well, with multifamily properties, you're essentially diversifying your income streams under one roof.
More units, more potential for rent coming in?
Exactly. But it's essential to analyze the rental demand in the area. Are there enough potential renters to fill those units?
Because an empty unit means no rental income, and that defeats the purpose.
Exactly. And you also need to factor in the unique expenses associated with multifamily properties.
Right, we touched on that earlier. Things like shared utilities, common area maintenance, landscaping for the entire property.
Precisely. So while the potential for higher income is there, the expenses can also be higher. It's a delicate balancing act.
Makes sense. Now, what about those vacation rentals we talked about? Those still sound pretty tempting to me.
They do have a certain allure, don't they? Owning a slice of paradise that also generates income.
Exactly. But I imagine managing a vacation rental comes with its own unique set of challenges.
It definitely does. For starters, you're dealing with a much higher turnover of occupants.
Oh, right, because people are coming and going for short stays, not signing year-long leases.
Exactly. So you're constantly cleaning, prepping the property for new guests, managing bookings.
It's a lot more hands-on than managing a traditional rental property.
It can be, especially if you're aiming for a more passive investment approach.
So vacation rentals might be better suited for someone who enjoys that hospitality aspect, who likes the idea of providing a memorable experience for guests.
Or someone willing to hire a property management company specializing in vacation rentals.
That's true. You can always outsource those tasks if you have the budget for it.
Exactly. Now, the last type of property we touched on, and this one's a big one, is commercial real estate.
Okay, commercial real estate, I'll be honest, that one feels a bit intimidating.
It's definitely a whole other ballgame. We're talking larger investments, longer lease terms, a different set of legal considerations.
It sounds like you need to bring your A game to the world of commercial real estate.
You definitely do. But the potential rewards can also be significant.
Higher risks, higher rewards, as they say.
Exactly. Now, regardless of what type of property piques your interest, the most important takeaway from Real Estate 101 is this: knowledge is power.
I love that. It's so true.
The more informed you are, the better equipped you'll be to make smart decisions, navigate challenges, and ultimately succeed as a real estate investor.
It's about approaching this journey with both eyes open, understanding the opportunities and the potential pitfalls.
Exactly. This source has given us a solid foundation, a roadmap to guide our exploration.
It's been like having a crash course in real estate investing.
I'd say so. We've covered so much ground, from that crucial mindset shift and market analysis to the nuts and bolts of financing, property management, and even the legal aspects of being a landlord.
It's amazing how much we've learned just from diving deep into this one source.
And remember, this is just the beginning. The world of real estate is vast and constantly evolving.
So it's about staying curious, staying informed, and maybe even connecting with other investors to learn from their experiences.
Exactly, because at the end of the day, real estate investing is not just about building wealth, it's about building a community.
I love that. And on that note, we've reached the end of our deep dive into Real Estate 101, how to buy your first rental property. I don't know about you, but I'm feeling inspired and ready to take on the world of real estate investing.
Me too. And remember, every successful investor was once a beginner taking those first tentative steps.
It's a journey, and like any good journey, it starts with a single step.
So go forth, explore those possibilities, and most importantly, enjoy the ride.
And until next time, happy investing.